Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the stock market as well as other stock macro indicators. So, starting off with fear and greed, we are seeing the stock market actually move up from extreme fear into fear. So, maybe like crypto, it is creeping into that neutrality territory. Talked about this in the crypto video yesterday, how this just spiked up into greed after being in fear and extreme fear for a while. So, is crypto trying to front run something? We'll see. I'll show you what I'm looking for in the charts. A couple things to keep in the back of your mind is that this downward sideways cycle, it's normal. Every administration tries new things, new economic experiments, all this stuff with tariffs. So it is normal to go down for over the course of 100 to 120 days. So 3 to 4 months from the inauguration, we're getting to that time. So we just recently had that dip that was near the 200-day moving average. I believe it's still possible we might retest that. But if we see lows continue to come in and deviate from this sort of a path, then I think we are on the recessionary path. But if we start to see a bounce, sort of like this chart showing, then maybe we are in something of a 1998 to 2000 style scenario. And I'll show you why I think that might be possible as well. Of course, as we think sort of medium to long term, it's important to remember that the second year of the presidential cycle tends to be weakest. I think there are some conditions in the market sort of setting up for that. I don't know if we are just going straight into a recession quite yet, as much as all the news would have you believe that. I do still get the feeling that there is more upside to go, but do know that in 2026, maybe even into 2027, it's very much possible we might see the market struggle, especially since the last couple of years, 23, 24, well, really since 22, did so well. And just something to keep in perspective whenever we get the recession, whether it is this year, whether it's 2026, 2027, whatever, when we see these pullbacks, just know how rare of an opportunity that is. So recently, the S&P 500 pullback somewhere between 20 and 25%. We only get that twice a decade on average. So good dip buying opportunity to look for. I think right now the SP is somewhere around 10 to 15% down. So still a good opportunity. But if we do get into a recessionary environment and conditions and we see the S&P falling 30% or more, that is very rare. So do be ready for those opportunities, which I believe will be coming within the next 1 to 3 years, somewhere in that range. Another chart to look at or macro indicator is the Shiller PE ratio. This does a good job of showing us when we're getting into bubble territory. What I do find interesting, so I've been making a lot of comparisons to 1998 to 2000. And 1998 had a similar style flush that we just saw recently in the S&P 500, but then it went up a bit further. And you can see here, we were getting into bubble territory, had a drawback, almost the same type of drawback, but pretty soon, within the next month, we want to see, is this going to start going up and get into a euphoric state? That's when I would be taking a look at seeing if the crypto cycle is coming to a completion, if we're getting another 4 year cycle, and if all of a sudden people are saying recession's canceled and we're not going to get a recession, and we see the Shiller P ratio up here, that's when I'd be very concerned. Of course, on my channel, I talk about crypto, I talk about altcoins, did an altcoin video yesterday, talk about Bitcoin mining stocks and other macro crypto indicators. So subscribe if you want to hear more about that. Anyways, let's get into the S&P 500. So the daily, we can see that it came all the way down to this trend line. Why is that trend line important? By the way, I realized I said the 200-day moving average. My mistake when I said that before. I meant the 200-week moving average. So let me correct myself there. But this trend line, I will have you guys note that this trend line has been in place since 2018. Now, there is a larger channel here at play that since the great financial crisis, we have never really gotten above or below this channel aside from COVID, though even on the weekly, it never truly closed underneath. It was just still staying above. But whenever we've gotten near this trend line or this 200 week moving average, that tends to be a good dip buying opportunity. We came right to that trend line, bounced up. Now, let me put on the buy. Oh, the buy sell signal is still on. So the sell signal is still playing out. We never got a buy signal completely right here. A couple dojis there. The 100 week moving average is holding up. I do wonder, are we going to get something of a double bottom and then resume upward? That's something I'd be looking for. And just going back to the comparisons of 1998, which we have right here, you remember seeing this on the Schiller P ratio I just showed you. So 1998, just something to watch for. I'm not saying that these fractal patterns have to repeat, but a lot of the similarities are interesting because back in this time, the Fed was only cutting by 25 basis points and then holding. And actually going later into the cycle, they started to raise rates a little bit. And then once they started cutting by 50 basis points, that's when we had that big correction, the dot-com bubble popping. But anyways, we see here that the S&P 500 in 98 had this double bottom. Look where the candle bodies were closing, underneath the 50-week moving average. Once it got back above the 50-week moving average, it was bullish once again. The 50-week moving average is one of those lines in the sand of whether or not you're bullish or bearish. Bitcoin is still above it, but the S&P 500 isn't. So right now it's technically bearish, but if all of a sudden we see the 50 being challenged and maybe coming back down and then going up, just remember we've seen that before. And what I'm looking for, even on these smaller time frames, what's it going to do when it gets to all these moving averages right here? The 50, the gold, the 200, the dark blue, the 100, the light blue. I'd be watching those. In crypto, I drew a fib and from the recent high to low. And in Bitcoin, what we saw is that the price got up to the 618. And 618s are notorious for being those lower highs. And it's right around where all these moving average is are too. So this is why it's important to combine your fibs with your moving averages. I think it helps you see things in a clear way. We have the golden ratio and then just a lot of averages. And they both pop up or they both honor those metrics quite often. But we can see here the S&P again stuck at that 0.5. Maybe it comes back down from there, but I'd be watching this 618 at 5,600 and then seeing, are we going to get that double bottom or maybe just go straight up? Maybe we're not going to get a double bottom at all. But that, I think I'm going to leave that fib on. That'd be something to watch for. As far as the VIX, the volatility index coming down, was testing the 20-day moving average, and this is the 50-day moving average right here. So did get underneath the 20. This is EMA and SMA, one of the moving averages for these EMA bands, and then the other ones for the buy-sell signal one that we look at. And so anyways, we're at the 50 here, and if we get underneath there, then maybe the markets can resume bullishness. But if we see a bounce here and high volatility coming back, that's when we're looking for those double bottom conditions. But regardless, when the VIX is spiking or getting high 20s or higher, that can often be good dip buying opportunities. Now, I'm not saying we're done yet. Going back over to the dot-com bubble, let's take a look at what the VIX looked like back there. And you can see this is from 1998, 97, 98 right here. The VIX got up to dang near 50, but look how elevated it was. I mean, it was hanging kind of on average here, right in the mid 20s, which is pretty high as is. And yeah, it was there for a while, even as it started to get into a downturn. So we all knew volatility was coming. The markets have been doing great the last couple of years, and this stuff is just bound to happen. We're going to see corrections. Nothing can go straight up in forever, but maybe we're going to see high volatility for the next couple of years. And so, make sure you're going by your plan and sticking to your plan. Don't let emotion take over. This is the indicator I've been watching like a hawk. This is the MMTH indicator, percent of stocks above their 200-day average, and this can be a good leading indicator. We saw a spike down towards these levels, which have been those local lows. Here was the true bottom in 22, even though this one's lower. This was the true bottom. This was the bottom in 23 as well. Even for as scary as last August was, over here really wasn't that bad, but this flush way worse. But if we are seeing some green and movements back up, that would be micro bullish in the short term. But right now it is a doji. I do think that double bottom sort of scenario, like 98, it's still in play. There's just so many similarities. The one similarity I'd say, like that I didn't hear from the dot-com bubble that you hear a lot more about now is inflation scares and just a lot of differences there. So do keep that in mind. Not everything has to repeat exactly. Insert the adage you always hear about. History doesn't repeat, but it rhymes. Whatever. Here, this is the quantitative tightening versus quantitative easing chart, and this is called the USC BBS, United States Central Bank Balance Sheet. The reason I'm showing you this is the 100-month moving average. And the last time the Fed changed to QE is when we smacked the 100-month moving average. And we hear or we see Trump telling Jerome Powell and the Fed to start cutting rates, and they say, no, we're not going to. But we'll see. We'll see what happens with these tariffs and the economic conditions are creating. Maybe they will go back to QE, but I do think it makes sense for QE to possibly return soon, just because it's bounced off that 100-month moving average before. And it seems to be leveling out here. So maybe it'll stay here for a few months, QE returns, and then we get a little bit bullish into 26. We'll see. So as far as 2026, I showed you that chart before, how the second year in a presidential cycle tends to be not so great. And I think this is one of the charts that lines up with this. This is yield curve inversion and uninversion. Currently it's uninverting, and would you look at that? On the monthly moving average, it is smacking into the 200-month moving average. It had a nice wick off there, so that is something to watch for. Let me get a drink of water. And so I do wonder, with as large as the yield curve has been inverted this time around, is it going to take longer to uninvert? That is a question I keep asking, because here we had the yield curve barely invert, and then the bottom wasn't too much later. Let's go to the weekly so I can try to get you accurate measurements. So this was even before COVID was a thing. People are expecting in 2020 for there to be somewhat of a pullback, and then we got a black swan on top of that and a massive V recovery. So that's about 200 days, even from a minor blip with the inversion. This is from the Great Financial Crisis. From the uninversion to the bottom, that's what I put these vertical red lines for, where the very bottom was about. That was about 637 days. And from the dot-com bubble, you can see that it was about 550 days, give or take. But also take a look at how steep the yields were going at the time. Right now, it's more of a staircase. If it starts taking off very steep, then I'd say, okay, maybe we're getting the recession sooner than later. But if it keeps staircasing or taking time or coming down and then going up instead of just flying straight up, then I do wonder if the fact that we've been inverted for so long on the yields is when the Fed was raising and holding rates up there. Because we were inverted so long, maybe the bottom is further away as well. So we definitely spent more time inverted. I haven't seen a chart out there to show how much of a correlation there is between time inverted to time that it takes when you uninvert to a recession. It doesn't look like it's totally correlated, even though there are signs to show the more time inverted, the worse recession it is. On average, not that being inverted more is going to mean that it's a worse recession than the Great Financial Crisis. Not saying that, but the bigger the inversion does tend to be bigger recessions in the future. But again, we'll see. We have this thing called inflation that has devalued our dollars by something like 25%. So I keep that in perspective too. When our dollars are worth less, how much can a recession really go down? Because for the long-term plays, once wages catch up, I think the stock market will fly, kind of like it did during the 80s. Unemployment still at 4.2, nothing to report on there. Let's go back on log. Good for macro scales. This is what I was talking about with the 618. And so Bitcoin from the high to the low, let's go to the daily here. From the recent high to low, it is at the 618. Let me get a drink of water here. It's at the 618, having a little bit of a rejection. If Bitcoin gets above that 618, which is around 94.6, and starts closing up here, I think that'll be very promising. So just something to watch for. But if the markets, do get rejected soon, I would not be surprised to see everything, including Bitcoin, maybe retest those lows again. It's recent lows. All right, let's get into the Mag 7 stocks. So we have this channel here, and let's just continue this channel. I think, yes, we got this big flush down here on the daily, but NVIDIA's still pretty much within this channel. Though it's fighting these 20-day moving averages, you'll see, isn't really able to get above it. And if it does that again, maybe it goes a little bit higher, but it may come down again. So NVIDIA from its highest top, how much has it gone down? It's gone down about, we'll go to the very bottom here. It's gone down about 40%. So keep that in mind. When your favorite stock goes down something like 40%, that might be an opportunity. I have seen the chart comparisons out there on Twitter comparing NVIDIA to Cisco in the late 90s, and some of those chart comparisons are scary. And if you believe in that, it could go a lot lower. I'm talking about $50 if it does anything like a Cisco chart is showing us. So keep that in the back of your mind. If you like NVIDIA long term and we get a massive recession, if it gets back to around, where all this price structure is around $50, probably an amazing long term buy and hold opportunity. But NVIDIA is still in a downtrend. Microsoft as well, still in a downtrend. Let's actually go to the weekly here. We were talking about how since 2008, the recovery, as Microsoft was just chopping sideways, as it went up, how often has it been underneath the 100-week moving average? Just twice, really. And so this is the third time. But, is this a sign of cracks starting to form in the economy at large? So what these Mag 7 stocks are going to do, because there's been such low breath for such a long time now in this current run, what that means is these Mag stocks have been taking up such a large percentage of the overall S&P, they're just overweighted, that if these aren't doing well, the market's not going to look like it's doing well either. However, there are a lot of stocks out there that are already down in big percentages from their tops. There are a lot of stock deals out there, I think, for good long-term possible holds. I'm thinking of stuff like Pepsi or SWK, stuff like that. Even Starbucks came down. I'm not saying those can't go down further, but there are a lot of stocks. 3M not too long ago that are just down big time. So, were those already bottoming? Is there more bottoming to come? But Microsoft does have another weekly buy signal. So, I'm not an Elliott wave guy, but maybe we're just doing 3 waves down and then get near that 200-week moving average. So you want to see that 200-week moving average hold for something like Microsoft. If it doesn't, I'd say, odds are recession is for sure sooner than later, because Microsoft pretty much is the top stock in the world. And as far as Apple, came up to its 100-week moving average, and the sell signal up here is still playing out. So Apple, again, some people say Microsoft or Apple are the top stocks in the world. I mean, think about this. This came down 35%. How much lower can it go? When we had the 2022 correction, this isn't going to be perfect, but it's around that much, around 30%. Let's take a look at a couple of these other ones. 38%. This was 2018 to 19. Tariff talks there too. This was, of course, COVID. I'm just going to ignore that one. Some of these other corrections, just giving you an idea of, the average amount of pullbacks. And we're getting 30 to 50%. Definitely pay attention. This here was a great financial crisis. Wasn't as bad as the dot-com burst for Apple, but this was 60%. So if Apple's getting down over 60%, that's probably buy and hold forever territory. the dot-com bubble, that was 82%. Though I would make the argument, Apple probably not as established as it was back then as it is now. But again, keep in perspective, this chart, this is for the S&P. When you see stocks going down 30%, 50%, or more, those are the opportunities where I think you can't miss. You get a second job. You buy as much as you can for the long term. All right, let's get into Amazon. Amazon getting nice support off the weekly 888, holding on to its 100. So, we do want to see confirmation. This is good support right here. But if we don't have confirmation for a buy signal, let's take a look at, we haven't taken a look at these two yet, the MACD and the stochastic. MACD is starting to come up, but even as the MACD comes up, prices can still go lower. And the stochastic, I like using the MACD stochastic with the buy signals. It's bottomed out. When it gets up here, that's a good area to watch. The MACD, the stochastic with the buy signals, with the moving averages and fibs. I like combining all those, but we'll just use the buy sell signal for now. Try to simplify stuff as we're looking at it. But yeah, Amazon, we want to see confirmation. Otherwise, this 888 could break. And we could see it double test this low at around 157. Google, people like Google from the Mag 7 stocks because it's one of the better stocks as far as having a lower PE ratio. You can see here this trend line, that wedge, it broke up and then came underneath that trend line. So all that's been invalidated. Can't get above that 100-week moving average. And so we are seeing these long wicks. That is showing good buy support. But if this 100 keeps slapping it down and not able to get above that resistance, and again, I think that 200 is in play at 137. And if we are going to see a double bottom, like I was talking about earlier in this video, I'd say this 137 probably be a good area to pick up some Google, even for the long term. I think that's a pretty fair area to look at. Meta, getting support off that 100-week moving average. This has been pretty much the strongest stock as far as just holding on to those 20-week moving averages. The first time since this run started, and it just came down and lost that fib extension, the 1618 at around 567. Now it's holding on support at that 100. So if you like Meta, there's good price support, good moving average support. Maybe it could go up here. I'm still hopeful for a euphoric end to this bull run. That this is just a correction within a larger bull run that's been going on since '08. You saw the channel I showed you at the beginning of this video, and that we can still see euphoria and then an ending to it. So I'm still hopeful for $860 Meta. We'll go over to Tesla, and then maybe I'll look at what's it called, Palantir as well. And so Tesla still holding on to this channel and the 200-week moving average and this 618 fib. So it's right in the gold pocket, 618 to 0.65. Let me show you what I'm talking about and actually make this a little bit cleaner as well. So if you want to see a golden pocket, 618 to 0.65, we have to turn all that down. There we go. And so right there in the golden pocket, been there for a few weeks. It's just right between the 100, the 200, the channel, and the golden pocket. What's it going to do here? If it loses this ascending channel, people don't always like ascending channels because stuff can, people call them bear flags. So, we can definitely see it come down. I will have you know that when Tesla has been in its most bearish in recent history, where has it gone down to? It's 100-month moving average. So right now it's holding on to the 50-month moving average. But if it comes down lower, possibly look for a bottom at around 174. Okay, now Tesla, a little bit different than the rest of these guys, because if you ever look at the numbers as far as the most heavily traded stocks out there, Tesla is almost always in the top 3 to 5. And it is so manipulated. So, if you love Tesla long term, I'd say that might be a can't miss area. But if we were to get a big bad recession, 30 to 50%, something like that, Tesla would of course be my leading stock choice. And then Nvidia, even though I like Nvidia a lot, to possibly come down big time. If it lost that 100-month moving average, I would not be surprised to see it get down, somewhere like 60 to 50, as crazy as that sounds. And so, does get most of its profits from automotive. As much as I want to talk about robots and other cool stuff, most of the profits, 90% plus the profits, still come from the automotive sector. And I will also say, on the bright side, they have a great balance sheet. Tesla has a great balance sheet. So if this one were to come down big, I do think there are some good things about Tesla in the books long term. So one to watch for if it has a big correction. Keep an eye on it. Lastly, let's go into Palantir. Palantir is one of those stocks that have just been running up, as you can see. This thing's just been having it's been doing so well. It's been euphoric for a while. I still don't think it's gotten that total euphoric chart that something like we've seen in on the gold chart recently. Gold is looking so euphoric. I'm still waiting for Palantir to just blow things out of the water and even get rid of all these fibs. We have this high to low right here, and it's just knocking these fibs out of the water. So how high can this one go? Who knows? It has a $250 billion market cap. Maybe it gets to 500 billion. Okay, maybe it doubles and gets near. If Palantir is getting up here, I think in anytime soon, if we do get a 99 2000 bubble scenario, I'd be selling the hell out of that. I don't know how much higher. Maybe it goes to 200, sure, but this is one of the top Reddit stocks, or has been for a while. People just talking about Palantir. And let's zoom in, look at some of those moving averages. Came down to the 1618 fib, hung on at the 2618 at its recent top, got all the way up to 125, came down to the 1618, good buying, held on to that 100-day moving average. At the 50-day, it's going to battle the 2618 here. So you want to see Palantir get above around 107 and 108. Anyways, let me know what you think in the comments below and what you think about the stock market overall. Do you agree or disagree with stuff I say? It's okay if you disagree. I'd love to hear your thoughts in the comments below. But yeah, I'm kind of watching for the similarities to 1998. Been talking about that on this channel for a while, but I think this one makes it very simple. If we're not going to get sort of that double bottom or something like 1998, I think the next month or two will really give us strong signs of whether or not we're going to continue up or maybe go down a recessionary path and then go up. If we did, I'll just close with this. If we did go into the recessionary path sooner or later, I'm not quite sure it's going to be one of those 40, 50 percenters. I'd be kind of taking a look 30, 35%, something like that, if it happens sooner than later. I wouldn't be so sure that it would be one of those .com bubble type deals. So anyways, let me know what you think in the comments below, and I hope you all have a wonderful week. No live stream tomorrow. Maybe I'll do one later today, though, to make it up to you guys. All right, take care.